Hello and welcome back to the Financial Freedom Show. You'll notice that there's some changes with my portfolio since the last video. What we're going to do in this video is we're going to go over why I am buying SCHD and why I believe that is a cornerstone of my portfolio. This is a great time to buy SCHD. It's down currently, so we'll also talk about why it's a good time to purchase SCHD and why I'm looking to add more into my portfolio over the long run. If you guys enjoyed today's video, please be sure to give it a thumbs up and subscribe in order to stay up to date with the latest in my portfolio's performance. As you can see today so far, the market is up slightly, 0.22% on my portfolio. So that translates into about $2 of gains today. My portfolio is up to $955.60. This is because I deposited the remainder of my savings that I was going to put into this portfolio, and from now on I'm going to let the recurring investments do the work for me. So I have it set up so that I will purchase $7 of SPLG every single market day. That's every day that the market is open, so that's only weekdays. And I have it set to purchase $4 of SCHD for every market day. So basically these two recurring investments are going to continue to add to my portfolio every single day that the market's open and dollar cost average over the long run. This should bring down my average cost lower than if I just lump sum invested everything in. And I look to dollar cost average well into the future. I'm just going to change the recurring investment amount as opposed to depositing large chunks from now on. So if you see the investment amount change for the recurring investment, that's just because I've decided to deposit more into that account. It could be that I change my recurring investment just for a specific week, just to get that money into the account faster, but I'm going to try and keep it around the same over the long run at about $7 per day and $4 per day for SCHD. I'm purchasing SCHD in a smaller amount than I am for SPLG, just because I believe SPLG will outperform SCHD in the long run. Because it's the S&P 500, it has a lot of technology stocks that SCHD do not have. So basically, I'm just buying SCHD for the income that the dividend produces. Now, when the market goes down, SCHD tends to outperform the S&P 500, but I will continue to purchase the same amount no matter what the performance is like. Especially if it goes down, I'm going to be considering purchasing more SCHD just because it's been in a downturn past couple of weeks. If we take a look at SCHD here, we'll be able to see that it is currently down 6% this year so far, when the S&P 500 is actually up 11% year to date. It's heavily underperforming the market, but this means that it's a great time to purchase SCHD. Just because the performance is bad this year doesn't mean that's the overall performance of the fund. It's just coming back to where it usually trades, which is a little bit lower than the S&P 500 on performance. It had a year of outperformance last year where it was above the S&P 500 for an extended period of time. But I am looking to add to it as it drops, and I'll continue to dollar cost average into this. Nobody can time the market. I don't plan on timing the market. I'm just going to continue to deposit into SCHD and bring my average cost down. So as you can see, my average cost is actually $70.92 per share, and I have 2 shares and a little bit over, and that's about 15% of my portfolio. So I want to get this portfolio percentage up to about 30 or 40% of my portfolio, so that I have the other 60% in the S&P 500. But that'll be something that happens over the long run with my automated deposits. I've actually made it so that the deposits will increase my position in SCHD so that the percentage can go up over the long run. If we go to the past 5 years, you'll see that SCHD has been pretty flat since about May of 2021. I believe this consolidation period is going to end pretty soon. If I go to the long term here, you could see that the chart was going up for the past couple of years in almost a straight line. And then the pandemic hit and things started going a little bit volatile here. But it is returning to the mean, and once it returns to the mean here, I believe it's a perfect opportunity to buy SCHD. and it will probably continue to go up at this rate that it has been going up the past couple of years once it hits the mean. I think it just has to return to the mean after this huge increase it had after the COVID pandemic, but hopefully it'll continue to go up over the long run. But I'm honestly not going to worry about this. This is just a long-term investment, so I know that it'll go up in the next 20 or 30 years. I don't plan on selling it anytime in the future. This is for my retirement. So you can see my total market value is $150 in SCHD. And so far I've earned about 29 cents in market value from my investment. This is about a 0.19% gain. As the market goes up over the long run, this will continue to increase, but mainly I'm going to focus on my shares, increasing the amount I own of SCHD, as well as any other funds that I put in this portfolio. I'm just going to focus on the increase in my ownership, because that's what's going to matter over the long run. The performance is going to do whatever it's going to do. I can't really control that. I'm just going to continue to dollar cost average in and reap the benefits over the long term. So I hope you guys enjoy joining me on this journey, and I'm excited to see what happens with my recurring investment into SCHD. So you can see that my first recurring investment occurred today for $2, but I've actually upped that to $4 over the long run. So the next one is going to be October 2nd. I'm going to get $4 deposited in SCHD, and that's going to continue to dollar cost average into the fund. So I should receive 4 quarterly dividends from SCHD per year, and those dividends are going to be about $1.50 based on how many shares I own. That can go up or down based on how much the dividend pays out, because the dividend is not a fixed amount. It goes up and down every quarter that it comes out. So I can't really predict that. It's just going to be an estimate based on what the past performance was. If we take a look at what's in this fund, 17% is in industrials, 15% in financial services, 11% in technology, 9% in consumer cyclical, 1% in basic materials, 16% in healthcare, 12% in consumer defensive, 10% in energy, 4% in communication services, and 0.3% in utilities. And the biggest holding is actually Amgen, AbbVie, Chevron, Merck, PepsiCo, Coca-Cola, Verizon, Texas Instruments, Broadcom, and Pfizer. The price to earnings ratio of this fund is actually lower than the S&P 500 right now. The S&P 500 is about 17. This is at 14.59. The expense ratio of this fund is 0.06, which is really low. And the dividend yield on this fund is about 3.75% as of today. So that is really good for a dividend fund. Usually they're about 2 to 3%, but 3% plus on a relatively safe fund is really good to see. If we scroll down to see the average return of this fund over the long run, it averages about 13% every year since 2011, which is really good. That's actually beating the market's performance. So that's why SCHD has been down this year. It was actually way outperforming the market by like 14 or 15%. But now it's down to closer to 13% based on the performance so far. If you guys want to join Robinhood and create your own portfolio, please feel free to use my link in the description down below. And leave me a comment if you guys have any suggestions for my portfolio, any questions on my funds that I hold. And let me know if you're buying SCHD. Do you plan on adding that to your portfolio in the future? Feel free to leave a comment down below. I love to read those, and I'll see you guys next time. Thanks for watching.